Hi, welcome to my channel where we simplify complex tax topics for you. In this video, we'll be discussing the criteria for identifying qualifying relatives for tax purposes. This is important if you're looking to claim someone on your tax return as a dependent. This is JW. I'm a CPA working as a financial and tax consultant and also work as adjunct accounting professor. I love teaching and sharing what I know. That is why I create this video to help you gain some basic understanding of taxes. In order to claim a person like your parents or relative or non-relative as a dependent on your tax return, there are 4 tests to meet. Now let us break down the 4 tests. The first test is called Not Qualifying Child test. A qualifying relative is someone who meets specific criteria set by the IRS. Unlike a qualifying child, a qualifying relative can be any age. A child isn't your qualifying relative if the child is your qualifying child or the qualifying child of any other taxpayer. So that means a qualifying child cannot be a qualifying relative. Let's take a look at 2 examples. The first one, your 22-year-old child, who is a student, lives with you and meets all the tests to be your qualifying child. Therefore, the child isn't your qualifying relative. You can't claim him on the tax return as a qualifying dependent. The second example, your 30-year-old child lives with you. The child isn't qualifying child because the age test isn't met. The child may be your qualifying relative if his gross income test and the support test are met. The second test is member of household or relationship test. To meet this test, a person must either live with you all year as a member of your household, or the person must have certain relationship with you. This includes immediate family member like parents, sibling, or children, or step-parents, step-sibling, step-children, and it can also include more distant relatives as well. The third test is gross income test. To meet this test, a person's gross income must be less than $4,700 for the year 2023. If the person you are considering as dependent exceeds this limit, they might not qualify. So what is considered as gross income of the person you try to claim as a dependent? Gross income is all income in the form of money, property, services that is not exempt from tax. For example, gross income from the rental property, unemployment compensation, taxable Social Security benefits. If the person you claim is a partner of the business, gross income includes partner's share of the gross partnership income, not net. The last test is support test. To meet this test, you as taxpayer who try to claim a person as your dependent must provide more than half of a person's total support during the calendar year. The support can be things like housing, food, education, and medical care. To calculate the person's total support needed, tax-exempt income is included, such as Social Security benefits, welfare benefits, non-taxable life insurance proceeds. Let's take a look at example. K, your sibling's child, takes out a student loan of $2,500 and use it to pay college tuition. K is personally responsible for the loan. You provide $2,000 towards his total support. You can't claim K as dependent because you provide less than half of the K's support. Identifying qualifying relative is crucial for maximizing your tax benefits. Remember there are 4 tests to be met in order for you to claim someone as your dependent. Not a qualifying child test, relationship test, gross income test, and support test. As a professional, I want to remind you always keep accurate records and consult tax professionals if you have any questions. That wraps up our basic discussion today on qualifying relative. If you found out this video helpful, don't forget to hit the like button, subscribe for more tax insights, and share your thoughts in the comments below. Until next time, take care and enjoy learning.